Let me tell you a secret and how it's really done. Tax liens, right? You would get a whole life, a whole life policy. And if, what I would do and what I'm doing, I would be purchasing, and it doesn't have to be, a large tax lien. You can get several small ones and still get a good return. Certain states offer great redemption periods. Some states are not tax lien states, they're tax deed states, which is a difference between a tax lien. But I would, get into the tax lien business using my insurance policy. Now, why would I do that? Well, for one, an insurance policy, if I do intend to take my money and I invest it somewhere, besides just giving the county tax assessor or whoever's running the auction uh, my bid for that auction, if say I win it, um, that money didn't have an opportunity to grow before it left my hands. So the first thing I would do is put it into a life insurance policy. And of course, wait a few weeks, take it out, and then go purchase or participate in the auction of a tax lien where I can get, depending on the state, anywhere from 5 to 36%, 32% return. Now, of course, 5 will be not reasonable because at least, and let's remember this: when you borrow from your insurance policy, you're not required to pay it back. Now, when you're saying be the bank, you want to pay yourself back. That's what bankers do. You don't take from the pot and don't replenish it. Now, I understand we all come into situations where we can't, but this is specifically talking about those who can, and we're using it in such a way where we're trying to create, wealth in creative ways with our business and our companies. So I would take a loan from my own policy. Now, loans might charge me a 6% loan interest rate. That's fine. Again, I'm at my own pace and discretion to return this, to pay myself back, to pay this policy back. However, although I took the money out, the money still grows as if I didn't touch it. I still receive the potential opportunities to participate in a dividend. So my money still grows as if I never touched it. While it goes and work for me with a tax lien that's going to give me, so if I know I have to pay seven myself back 7%, I'm going to try to find a potential return of anywhere between 10 to as high as I can, right? Or 11%, because 3 to 4% return. Now, let's also consider the other thing: taxes. Got to pay taxes on those tax liens. Now, I don't want to talk about taxes here of ways and, oh, where's the way to go? I want to talk about that here. But there's a tax responsibility. So, of course, I want my return to be a little higher. So, that's because there's a tax responsibility on that money. But at least I can make that money, turn around, pay myself back, although it's still growing as if I didn't touch it. I'm still getting dividends as if I never touched it. But I pay my pot back, pay my tax responsibility, and still have some left over that I either keep in my own pocket or put back in my policy, rewash and repeat. So is a creative way we can be the bank using tax lien property, even tax deeds. Now, tax deeds are different because there's no redemption period. you are getting that property outright. There's no opportunity for that tax debtor or that delinquent tax debtor to redeem the property. So this depends on your state. If you want to learn more, follow me on Facebook under Turi Ali, Toure Ali, and Live in Equity on Facebook, as well as Live in Equity on Instagram, and Live in Equity on TikTok. And as always, you guys, thank you for following me. If you'd like to support my channel, please subscribe. Well, I have a subscription channel coming soon, but please share and like, and of course, subscribe to the channel. And if you'd like to donate to She Amaru Ali, a Cash App. It's XIAMARUALI at the Cash App. All donations are appreciated. So we continue to do what we do, is give you this information consistently. As always, we appreciate you guys, and we'll see you on the other side. Yeah.